Good morning, everyone, and welcome to the Quantum Leap morning homework session. This is Quantum Leap. We're a self-organized learning environment. We've been running a private Skype room for over 4 years now. Each day we come together, talk about the markets, talk about trading, and each morning we come into this live go-to and go through our daily routine, getting prepared for the market, and going through the macro to the micro, and then taking a look at the structure and the levels of the market, and then put our trade areas and our targets in for the day. I want to start off just a little bit differently today, but we have to get the legals out of the way, so let's do that. This information is for the purpose of educating members who want to expand the knowledge of the business of trading. It's not for trading or investment advice. Only you are responsible for the trades or investment decisions you make. Trading futures or any instrument involves the risk of loss. Please consider carefully whether futures or options are appropriate to your financial situation. Only risk capital should be used when trading futures or options. Investors could lose more than initial investment. Nobody in Quantum Leap is a certified trading advisor. We are retail traders operating within a self-organized learning environment. Past performance is not indicative of future results. Okay, so I want to talk about yesterday, because yesterday we had a couple different hypotheses. Everybody always asks, well, why do you have more than one hypothesis? Well, because nobody, I don't care who you are, can tell you 100% for sure what is going to happen within the market. There are three forces in the marketplace. There are those that are short already, those that are long already, and there's the third force that has not taken a position. And the market is an advertising mechanism to that third force. And anything can happen that will create or change perceived value. Well, yesterday there was an event that happened, actually a couple events that happened, but the main event is a very large, what we consider to be an OTF, other time frame participant, took a very, very large position, negative position in the market, and bought May 1995 puts. These are deep in the money puts, and this position is basically a $2.8 billion bet that the market high is in, and it spooked the market, and as the word got out, it caused panic, and people were selling into this market, and obviously we revalued. So our main hypothesis was to come down and hit our main target and test it from above, because we opened auction out of range. We did hit our main target, but my main hypothesis is after we'd come up into this microcomposite balance area that we'd rotate up and go and test the targets above, the 69.75, the 73, the 77.75, and I was looking for that equalization. If you were in yesterday's session, you'd know that's what I was looking at as my main hypotheses. Of course, we always prepare for events that are going to be outlier events, and that's why we have our levels set to the upside and to the downside, because we don't know exactly what's going to happen, but we want to be prepared for when our main hypothesis is proven wrong. So we have our secondary and a third hypothesis that we looked at. And when you are prepared and have a plan, you can react to the market much clearly. And you can see as we came down to the 61.25 level, we had talked in the morning session yesterday, and the morning session is up on YouTube. If you want to go and review it, I would encourage you to do so. We rotated back down to our first target below, which was the naked VPOC from the prior day, and then when we broke that, we came down to a key level that we've been talking about all week, which was that 55.25, 56 area, and then when we broke that, we went down, rotated back, tested it from below, rejected it, and then we sold off the rest of the day and actually went down and hit our extended target. I don't know why my extended target at 43.50 is not showing, but this was our extended target. You can look at the charts from yesterday, and basically came down and hit our target. So you always want to be prepared for whatever the market throws at you. because when it throws a curveball, you want to be able to make that hit. So you always are prepared to, you know, adjust your strategy and have a plan in place that you can trade off of, because you don't want to be caught flat-footed where, you know, all of a sudden the market doesn't do what you anticipate, therefore you don't know what to do. So if then that, always prepare, always have a plan so that you're ready to react when things don't go your way and your main hypothesis doesn't play out. So what we do each morning is we go through this morning routine and we look at the key numbers and you know, see what we have above and below us. Of course, the key one right now below us is this 1837.75. That is the year open, and we want to pay attention to that. Right now, we have a previous month low at 1732, and then we have our current month low down at 1823.50. So these are going to be key levels below us. Above us, we have the you know, 1846 CLVN. This is a level we'll be playing off of. This is one of the levels that I talked about, whether or not you want to trade short or long. And then above that, 55.25 level. But let's go through and see what we've got from yesterday's. Again, sorry, I'm not used to doing it on this screen. So yesterday's Globex opened at 1859. We had a Globex high of 1867.50 and a low of 1858.50. And then we opened auction out of range. And this is one of the reasons why my main hypothesis was to go up and test higher, because we had broken out of range and out of value from the prior day, and you've got to look for initiative buyers stepping in. Now, the initiative buyers stepped in and took us up to 68.75, I believe, and that's where we failed. And then from there, we rotated back down and just we sold off the rest of the day. And we did have a trend day yesterday. Our opening swing high, 68.75, which is our RTH high. Opening swing low, 63.75 for a 5-point opening swing. And then our initial balance was our opening swing high at 68.75, and then the initial balance low was that key level at 61.25. And even at 61.25, I was still anticipating the possibility of rotating back up. But once we broke that, we went down. Our 1230 number, look at where it was, 1855.50, one tick above that key CLVN at 55.25. Tell me that the market doesn't have memory and these numbers don't come back up. Here's a couple other ones for you. Our RTH low is 41.50. We've seen that. We've come down there. You know, now the key to this is we had a bullish engulfing day yesterday, but we did it within the range that we're in, and we'll take a look at that at the composite. We've got to really look for, I think, now the break of 39, and if we break 39 and get below the year open at 37.75, then I think we're you know, we're in trouble and we're going to see a bigger retrace. Our intraday numbers, you know, RTH closed 42.75. Our VPOC, we created a double distribution day yesterday, and you know, I put that into Twitter sometime during the course of the day. Buyers didn't have any ammunition, so that we're going to create a double distribution. And our VPOC stayed above at 62. So we left value not only in the microcomposite, where the most accepted price is 64.50. We left value yesterday in the upper distribution at 62. Our range continues to expand out. Our 20-day ATRs are now topping 17.50 for the RTH, now topping 20.50 on the full session, and we're close to 11 on the Globex RTH range. And then value area, we had a higher value area high, but then we put in a lower value area. We had a very wide value area. 68.50 to 52 is a pretty wide value area at 16.5 points. That's been, you know, happening a little bit more often lately as they battle it in this zone. And then, of course, we broke the IB to the low side right around. Remember, yesterday we did that test from, you know, Typically, the initial balance is going to be broken in what we call the pocket, which is the the setting of the IB at 9:30 Central and 9:45. But this year, since the beginning of the year, that's shifted where the typical time that the initial balance is broken is now shifted, and it was right around. We looked at it, from the beginning of the year. Let's just do that for those that weren't here yesterday. And if I add all these up and come up with the average rate now is 954.47. Look where we broke it yesterday, 955. So very, very much getting a later break as they battle back and forth the first hour to who's in control, the bulls or the bears. So let's go over to the daily report and take a look at that. Obviously, I've got to make one adjustment because I think we've gone down now and put in a new low overnight. Our new low was just put in at 39.25. Let me just adjust my numbers. Just writing them in my journal. And then let's go back to the sheet, and we'll change this. It was 42. It's now 1839.25. So our full session 20-day ATR target to the upside changes to 49.88 from 62.50. So that's right near that 50 area we'll take a look at on the composite. 49.88, so I'm going to actually just put it to 49.75, and then to the low side 27.88, and I'm going to use 28. I always go in just inside of what the ATR range is.
Yeah,
taking a look.
You typed in 1829 instead of 1839 for the low.
Sorry, that's going to change that number then. Thank you so much. What did we say it was? 1839.25, right?
Yep.
Sorry, it's going to be 1859.88. So call it 1859.75. Yeah, that looks a little bit more reasonable. And then going and taking a look at our news. We just had unemployment rate, so we had that delayed reaction with the rotation down to test that CLVN at 39. And then we've got no real news until 10 o'clock, which is pending home sales. So that'll happen within, 9 o'clock Central, 10 o'clock Eastern. That will happen within the first 30 minutes of the marketplace. So just be careful on the open. This market is looking for excuses to have a reaction and break outside of this this balance that we're in. And then we've got natural gas at 9:30. So let's take a look at the macro to the micro. I always like to start with that so I understand where we are within the trend. So our monthly trend is very much intact. We've come down off of the year high and trading in the upper distribution of last month, but we've got good slope, we've got good separation on the 9 EMA and the 20 SMA. Trend is very much intact on the monthly. Now on the weekly, we've come down and we're testing the 9 EMA again. And we talked about the possibility of having this head and shoulder pattern setting up here, and this would certainly, if we come down and test this lower area here and then come up and have a failed lower high, then we have a possibility of a major topping pattern coming in on the weekly pattern. But currently right now we're losing a little bit of slope and a little bit of separation, but we haven't broken the 9 or the 20, so the trend is still intact, although it is starting to weaken on the weekly. On the daily, well, we had had that weakness in last week, and then we popped back up, and now we've broken back down below. And no real trend yet, but we are starting to get separation, and we are trading below the 9 and the 20, so we are seeing some weakness coming in here on the daily. Going over to the geometric chart, well, we have this energy point that's still above us. Now there's 4 major forks on this chart. There's the long-term fork that we've been following for almost 3/4 of the year. And the lower line is this line right here. We just broke back below it. And then there's the intermediate upward sloping fork, where we are testing and rejecting the center line in the last 2 days. And then there's two downward sloping forks, which is this one right here with the center line right here. We went up and tested that to the high side and rejected it. And then there's this newer fork that I added in beginning of the week here. And you can see that we've got this energy point right here that is scheduled to hit tomorrow here at 1855, key level in the ES, but currently we're trading below. So what I'd be looking for to the upside is to come up and test this lower line of the long-term upward sloping fork at this 1855 level, or come down now that we're rejected this this upper line of the longer downward sloping fork, and now come down in the shorter term fork has come down and test the center line of this fork, which will take us down into that 1823.32. Really, it's 1825 area that I'm looking at below us right now. So that's about the only information that we're getting off of the geo chart right now. Let's just take a look at the intraday trend coming into the RTH session. You can see that we created this. Let me just increase this so you can see this. Maybe too much. We why is this is being very sensitive. All right, so we broke down 920, or the 9 crossed over the 20. We came down and we created this technical gap right here. We came back up, tested the 9 from below, closed the technical gap, and now we've broken back down below. And actually we created another little technical gap here. So we are seeing a beginning of a trend. This 4 hours, as we were talking about all week, has not really given us any indication of a trend. This is the first time that's really starting to show us a bit of a trend to the downside. Going down to the 30-minute, we've been in consolidation pretty much all night after the big down move. You can see we had good slope and separation down here, created this technical gap here. Technical gaps are closed by either time, by going sideways and the 9 EMA coming down to meet us, or through price, where the price moves back up to close the gap. This is a good example of coming down and then just going sideways and the 9 EMA closing the gap through time. But we just basically been consolidating, but we are seeing some weakness coming in with the news at 7:30 Central Time. And then going to the 5-minute. 5-minute is showing a little bit of a trend as well. Again, another example of a tech gap, and this is actually a tech gap foobar, Mr. Sneaky. Not going to get into what all that means, but showing that we closed the tech gap and we are rejecting the 9 EMA from below so far, and that is right at that 1842.50 area. So let's take a look at the big picture on the, okay, what did I do there? Can you see my, there you go, you see my screen here. So this is the composite right here, and of course I'm going to add in yesterday's day into this profile right here and bring this over as well here. So there is a couple things I want you to, just want to get a good picture here. Even though we had this, bullish engulfing day where we engulfed the prior day and the day before, we really haven't come down and broken out of the balance that we've been in since in this profile that runs from March the 17th through to yesterday, with the range low being right there at that 49. We come down in the Globex and tested this 39 CLVN, but in terms of the RTH, we're still trading within this balance zone. Now, the key levels that we want to pay attention to, and remember, value, the overall microcomposite VPOC, or the most traded price going back to the March the 4th through to yesterday, is still above us at 1864. Value is not shifted lower with us, and really, you want to see value shifting lower. And a good example to show this too is on the profile only chart. Let me just bring that up. You can see that value's still up here, and we're still in this balance area here. So even though we're seeing a reaction to that new stimuli that came into the marketplace in terms of Obama putting out some tough words against Putin, and the fact that that guy took that OTF took a major position, we still are within this balance area. So don't count. Don't get your short hat on too quickly right now, because this could be a short-lived pullback. Pullbacks are, just a mechanism to find buyers. They came down. Where did they come back and, find buyers? They came down to this 40.75. You can see that the 2 days that we broke down out of this balance right here, up here, we came down and tested this this area right here. And I don't know why my profile from here is missing, but I'll go and fix that. Let me just fix that because I need that to show you guys. And you can see that this coincides with the 1835 area, which is right here at the CHVN at 1834. And I've been talking about this distribution area down here for a couple of weeks now, that I felt that if they came back down to test this 41 area again, that they'd likely have to go lower and come down into this 1834 area. And then we've got these three distribution points down here at 34.75, 29.50, and 25.25, which to me is undetermined fair value down here. So the key line in the sand that you want to watch for right now is this 39. This 39 CLVN. If we break below that 39 CLVN, they're likely going to rotate down here at 34.75, where the most accepted price was, where they accepted value here, then they tried to break higher, and then they came down, and again they found value here, and launched from there. Then they came down a third time, and usually when you go to the well too many times, it's not likely to hold. So that's why I'm saying we're likely, if we come down here, not to see a big bounce off of this 34.50 area. We're likely to come down here and get stuck down here in this distribution zone as we play ping pong between these three undetermined values at 34.75, 29.50, and 25.25, with the other side of balance being down here at 21. And then if we get below 21, I think all bets are off on the long side, and you got to then start looking short with a larger rotation down to the big number down here at 1807.50, but more likely a test of the 1800. And if we break 1800, the big destination point was that 1781.50 in the March contract, which has been adjusted down here to 1772.50. If we stay above 39, then I think we start rotating back up. Test this this 46.75. If we can get above 46.75, then I'd be looking for a move up to test the value area low at that 1850.75, and that's a key number with that 55 just above. And then if we get above 55, then this major magnet up here at 64.50 is going to come into play, and we're going to rotate back up into this balance and then hopefully accept it and then try to make have the bulls finally make a run to the upside. But let's take a look at what that looks like against yesterday, and put our Globex numbers in to our trading chart. And our high so far overnight is 48.50, and our low is 39.25. Sorry, I used the opening swing instead of overnight high. So 48.50, and overnight low 39.25. And our VPOC overnight is not going to shift, and it's at 46.25. All right, so let's get rid of this. We don't need that now. And let's just expand this out so we can take a look at the levels. And so we're either going to open up just inside of range, but outside of value. The value area low from yesterday is up here at this 52. And you can see that we had a double distribution day with our LVN, or significant LVN, right here at 1856, right at that level that we're talking about, and basically at that 55.75. So this area right here is going to be important in terms of whether we stay in the lower distribution or whether we get back and go up and visit the upper distribution and take out the naked VPOC at the 62.50. So this 55 is the CLVN, 55.25, but it's really, you're going to have to get above that and get above this 56.75 in my mind in order to get a rotation back up into the upper balance. Of course, right now we're going to be opening up just inside or just outside. You've got the naked VPOC still sitting down here, which I think is from, is it Thursday or Friday? Was it? Oh, it's from even further back. I'll have to go and take a look at what day that is from last week. But it was one day last week. And then, of course, we've got our overnight low, and that should not be 38. That should be 39.25. So you're going to open up just in a key level. So we're likely going to rotate down to test this 41.50 RTH low and come down and take out this 40.75, but there's no real clean edge here. The only edge that you could take is this 43.50. So what I would do is I would use this 43.50 as an area to, if they reject, come up and test this 43 before they break out of the range, I would, and you get a strong rejection because your close, your naked close is going to be here at 42.75. So if they come and reject this little swing high on the close and this LVN at 43.50, remember 43.50 was the value area high of the smaller balance area that we were looking at yesterday morning. If they get below that, then I take the short into the retest of the 41.50 and the takeout of the 40.75 with a move down to test and take out the overnight low. I think that's your highest probability if we can't get above 43.50. So I would take the short into the break of the range and the naked VPOC. Now make sure that you get scaled before you get to this 41.50 because you could get responsive buyers stepping in here to hold us inside a range. And now if we open up outside a range, we still have 15 minutes, okay, then I think they come down and take out the overnight high. I think you're going to see, overnight low. I think you're going to see initiative sellers step in and try to break us down below this 39 and take us down in towards that 34. So 39 is going to be a key area that I'm going to be looking for them to come down and test and break. And then if they break it, the first target below is that 34.75 with a naked cross naked close at 32.75 with the two targets below that, which is the 29.50 and the 25.25. And let me just caution you, if we get down in this level between these three targets right here, you want to be very careful about trying to take a trade. To me, this would be, if you're not in a trade already with the break of 39 and running runners, it's going to be very difficult to trade these three levels. You do have the 30, I can't see it, 33 CLVN and 27 LVN, but I think it's going to be very choppy in this area. My advice to people is don't try to initiate a trade in here, and if you do, you've got to play off of 27 and 33. But there's a lot right there. So I'm going to put the trade areas in here at 33 and 27. But, you know you're wrong quickly, because it's going to be choppy in this as they try to determine. You can see that this is a very blunt area, which really has not determined what's the dominant number in here. You would think it's 29.50, but because of the VPOC, microcomposite VPOC being 34.50, it's going to have stronger influence than I think the 29.50 is going to be. So just be very careful in here. And then below that you have 21.50, which, if we get below 21.50, this 18.50 no longer becomes a trade area. It becomes a target down here. This is going to be my extended target below. Okay, and then to the upside. If we get above 43.50, I'd be looking for a rotation to take out the overnight high at 48.50 as your initial target above, and our main target above, with the value area low at 52 being an area that you'd look as basically your main target above, and an area where you might get responsive sellers stepping in to hold us in this lower distribution and remain, leave the market weak. And then above that, of course, we talked about the 56, and above 56 you've got the 61.25 area, which is this this area. It was a value area low for the microcomposite from the upper balance up here. You can see it's right here, 61.50, and you've got the IB low from yesterday at 61.50. I don't think it's going to really offer much resistance. I think with the naked VPOC here at 62.50, we're likely to go through it. And then a rotation up to the other side of balance, and the main target, or extended target above, which is at 64.50. And this is going to be our extended target to the upside. It's not really extended, but it's going to be hard to get back up there again in one day. I don't think we're going to have that big of move, so I'm going to put it in as my extended target to the upside. And then the other side, and the range high from yesterday is at that, and the value area high is at 68.75, and that will be a trade area. And any breakout above that is going to take you into, no, come on, it's not a target. It's a trade area. Well, trade areas are targets, but you're looking for a response there. And then a break above that will give you 71, it's actually 70, 75 now, and then 73, and then, you know, the real, you know, big area above is that 77, 75, and then that 80, 50. All right, so that's what we're looking at. Let's just take a look at how that fits with the Renko and Keltner channel. Currently, right now, we're in the lower channel of the Keltner. A test of the center line of the Keltner channel will take us up to 45, which is going to be, you know, just below the overnight VPOC, and we'll likely get a break above it. And then a test of the upper Keltner line is going to take us up to 51.25, which is basically going to bring us to a test of, by the time we get there, it'll probably be 52, and a test of the value area low. A test of the lower Keltner line will test that 39 and that key line in the sand for us. If we break below that, look for a move and a sharp move down to 34.75. Very quickly, I want to just go over to gold because you know, this cup and handle formation, you know, we talked about if we broke below yesterday that 1306 to look and get short into 1300 with a possibility of continuation because we've now validated the cup, and the handle still can go down further down into that 58, 60 area, and currently we are trading below the 1300, and we said that our first target below us was that 1292 area, and look where our low was overnight, 1291.90. So this can still have some, you know, if you're not already short, you know, look for opportunities to continue to short gold into a further continuation. The next rotation or the next support below us is that 1282. Let's let me bring the composite chart up. So we've broken out of this balance right here, and we've come down and we've tested that that 1299 or basically 1300, and then this is the RTH session. I'm sorry, this is the full session, and you can see we came down to that first target, which is the 1292 area, and we've got that C or that microcomposite VPOC at 1290.70, I believe it is, and then the next destination below that is this 1282.30 with 1275, and then of course down to that 1258, 1260 area. And I do believe that that is a possibility as we come down into this, you know, below the 1300s. If they get back above 1300, then look for a rotation back up into this 1304 area with a probability of a continuation back up into the 1312, which is the microcomposite VPOC. So that's what I'm looking at in gold. I'm not expecting much more than that. Maybe up to the 1320. We've got a bit of a triple distribution here, and we could come up and test this 1320. This is a former microcomposite VPOC and the microcomposite LVN and a CLVN. So that would be the upper range that I'd be looking for today if we had a rally in gold. But my main hypothesis is we reject 1300 again from below and rotate back down towards this you know, 1290, 1289 area. I'm sorry I took so much time, Howard, but we had lots to talk about, and we had some technical difficulties. So that's going to complete our morning homework session. You know, as always, you know, trade well, trade safe, and we'll catch you on a flip side.